Good afternoon, everyone, and happy Friday. Thank you for joining us this session. Welcome to First Metro Securities third quarter 2025 Philippine Economic Insights, presented in partnership with the Ateneo Center for Economic Research and Development. For those who may be new to ACERD, it is an academic think tank from Ateneo de Manila University dedicated to advancing policy recommendations that foster industry competition and sustainable economic growth. My name is Ange Bakay, Equity Research Associate from First Metro Securities Research, and I will be hosting today's session. This afternoon, we are privileged to have Dr. Luis Dumlao, who will walk us through the Philippines' third quarter GDP results and overall economic performance. He will also share ACERD's outlook and insights for the remainder of the year. As a brief background, Dr. Luis Dumlao is a senior fellow of the Ateneo Eagle Watch and the former dean of the John Gokongwei School of Management at the Ateneo de Manila University. His expertise spans macroeconomics and international financial economics. Before we begin, let me quickly run through a few house rules. First, all attendees will remain muted during the presentation. If you have any questions, please type them in the Q&A box and we will address them during the Q&A portion later. And then please also note that the views and opinions expressed during this webinar are those of ACERDS and do not necessarily reflect the views or positions of First Metro Securities and the Metro Bank Group. So, without further ado, I will now pass on the floor to Dr. Luis Dumlao.
Good afternoon. Thanks for having me. So to save some bandwidth, let me turn off my video, uh, and then I'll share my presentation. Um, and I'm gonna need help from Ange here. Uh,
Yep, it's already visible.
Scared. Okay. So thank you for having me once again in this quarterly briefing. Um, so I'll go through my usual outline. First, I'll talk about growth. Uh, Growth isn't everything, but without growth, everything is nothing. Quoting from Angela Merkel. Then I'll talk about inflation. Uh, uh, Quoting the minimalists adage, that is less is more. Then I'll talk about unemployment because unemployment causing job losses means causing grave social harm, quoting from Pope Francis. And then I'll talk about finance, particularly international and public. I only have one slide on private, but the theme the theme that I would have in terms of public finance is the time to repair the roof is when the sun is shining, and that is quoting from JFK. This is something that's not part of my routine, but I'll talk about it since it's something that is hanging on us the past few days, the past few months. Uh, Quoting from Pope Francis, corruption is paid for by the poor. So we talk about growth because we need three things above all, quoting from Angela Merkel. First, growth; second, growth; and third, growth. Growth isn't everything, that's true, but without growth, everything is nothing. That is to say, without growth, we can either ask the have-nots to remain miserable, or we can confiscate from the haves and give it to the have-nots. With growth, we can give more for all. Uh, it's The growth is surprisingly lower. And then we'll look at it in perspective, the last 20 years or 25 years. And then what I'll have here, will show here is the business as usual benchmark or base case scenario. What happened if there is no shocks, if we just show up to work and do nothing differently? What is the direction of the economy in terms of growth? This is the growth the past 20 years. The past 20 years, we'd see that spikes in uh, the recurring theme is there had been uh, minor GDP growth spikes during presidential elections. That's the election of President Gloria. And then you have here is the global financial crisis. And then what I have here, the next one is the presidential election. This is something that's important because it's happening these days, and we should learn from this from history. This is the time when President Aquino took over as president. He stopped practically all government projects in suspicion that all of these projects that were signed by the previous administration uh, were were uh, were anomalous. And what we learn from here is if we indiscriminately stop the spending, it can actually hurt the economy because of if we indiscriminately stop spending because of the corruption scandals that's gone, we can actually hurt ourselves. Then you have the presidential election of President Duterte. Of course, we have the COVID-19 pandemic, and then the presidential election of President Marcos Jr. Uh, uh, then so the actual growth, the last one was 4%. The potential growth or the equilibrium growth, normally we would be growing by 6.1%. And what we have now is the 4%. Obviously, we're doing not as well as we should be. This is the average growth rates the past 25 years. President Arroyo, 4.8%. President Aquino, 6.2%. President Duterte, 3.9%. And presently, President Marcos Jr. so far averages at 5.7%. This is the what will happen. This is the blues are the actual growths, and the red ones are basically the red ones are the base case scenario. So for example, the latest data is 4%, is third quarter, and we anticipated, I think among many forecasters, the median is 5.3%. We projected it to be 5.6%. That's the base case scenario, and actually it slowed down by only 4%. So what happened basically is so it's a kind of a surprise because surprisingly slow, 4% as opposed to 5.6%. And that's across the board. You'd see here, agriculture should have grown by 5.2%, and yet it grew only by 2.8%. Industry, we already had a modest uh, base case scenario of 2.7%, and yet it actually grew by only 0.7%. Uh, Service was supposed to grow by 6.8%. It grew only by 5.5%. And then in terms of subsector, you have ag construction anticipated to grew at 2.4%. It actually contracted by 5.5%. Transport anticipated to be 8.7%. It actually grew by 3.3%. And then storage, transport and storage, 8.7%. It grew by only 3.3%. Uh, the fact that transport and storage has gone down, it's an indication that people are, businesses are basically cutting down their inventories. The third quarter will, in the fourth quarter, uh, so the third quarter, 4% will persist. It will continue to drag to the fourth quarter. The annual growth is going to be 4.7%, and that is less than the 6.1% steady state. So these are the steady state or equilibrium growth rates for each sector and subsector. Okay. Uh, the last one, so we will miss the target. The government target is from 5.5% to 6.5%. And indeed, Secretary Recto and Secretary Balisacan have conceded the fact that we will miss the 5% growth. Then it will moderately pick up in 2026 to 5.8%. The last column is in terms of long-term planning. Uh, so for example, the fastest one would be accommodation. That means accommodation and food service will double in 6 years. That industry will double in 6 years. Transport will double in 8 years. Construction will double in 9 years. And same goes with uh, professional and finance. This is professional business services and finance double 9 years. when I do this to corporate planning, basically, depending on the industry, uh, this is a benchmark that if you are, for example, in finance and insurance, if you're not able to double your asset in 9 years, then practically you're missing out. You are behind the rest of the market. Pardon me. So, but anyway, accommodation will be the fastest to grow, and accommodation is only right there. It will be the fastest to grow. The blue versus the red is the present versus the 10 years from now. It will be the fastest to grow. However, it will not, it would be relatively small in relation to, for example, wholesale, manufacturing, financial services, and so on. So what you see here, this is agriculture. It's the fourth biggest subsector. But you would see here that so it's bigger than construction, professional service, and real estate. But after 10 years, construction, professional, and real estate, and even public administration will be a bigger industry, will take over uh, agriculture or overtake agriculture. This is the business cycle of expenditure. Again, we anticipated, so consumption anticipated to be 5.6%. It was only 4%. Uh, Same goes with investment. We anticipated it. So a very modest 1.5%, but it actually contracted by 2.8%. In terms of subsector, you have the durable equipment, 9.9% anticipated. It should have been 9.9%, and yet only 0.6%. So the result in durable equipment can be a sign of lasting slowdown in construction. The fact that they are slowing down in the expenditure for durable equipment, therefore they are cutting down. It's anticipation that they will not need to expand for durable equipment for construction. The second quarter, the fourth quarter, once again, is 4%. So what happened in the third quarter will persist. Same growth, 4%. The 25 as a year, 4.7. Once again, a negative output gap of 1.4%. I have a silver lining here, and the silver lining is that the net primary income from abroad, the dollar that comes in, remittances, so in absolute value, around 14%. Uh, However, as a percentage of GDP, it will exceed the number that the dollar that goes out because of trade deficit. That means the silver lining here is that more dollars will come in than go out uh, for this year and next year. Then you have the gross capital formation and import will double. Specifically, gross capital formation investment will double in 8 years. While investment will double in 8 years, that would be the fastest. So investments will have the blue versus 10 years from now, while capital formation will grow fastest, more than double in 10 years. Consumption will not, but in terms of its share in the whole income, the whole GDP, it would still be a predominantly consuming economy. This is what we have in Asia, in Pacific, in Asia. What I have in positive above the 45-degree line is everyone uh, whose economy grew faster than expected. And this is the Philippines. Everyone on the below grew slower than expected. So obviously the Philippines grew slower than expected. So it's a disappointed in a sense that it is on the negative territory. But if you look here in East Asia, only Vietnam will grow faster than the Philippines. So we'd still be the second. Disappointing in a sense that we grew less than what we're capable of, but still it's the second fastest growing in East Asia. This is now the World Bank income classification. The Philippines, the last data is $4,470 per person per year of income. And the threshold to become upper middle income is $4,496. So we just missed it out by $26. So there is a good chance that by this year, uh, a good chance that this year we can be an upper middle income economy. I'll go now to inflation because, again, quoting for the minimalists, less is more. Philippine inflation steady at 1.7% in October. How good or bad is it from a historical perspective? We look at the causes of inflation and then looking forward. So historically, from the past 55 years, uh, shocks are usually externally driven and supply side. For example, the first shock that we have here is the first oil crisis. Uh, then we have the second oil crisis, the taking over of the Ayatollah Khomeini in Iran, and then I have this instead of red, I have this in blue because it is self-inflicting. This is the Philippine debt crisis. The next one that I have here is the global recession and the Kuwait invasion. And then the next one is the Asian financial crisis. And then during President Gloria Arroyo, we introduced the value-added tax, which spiked inflation. And of course, that's also the beginning of the Iraq War. And then we have the global financial crisis that started in the United States. And then the rise when we started to claim or experiment that we would be self-sufficient, it actually hurt us in terms of inflation. And then the spike in the global price of rice and the invasion of Ukraine. So right now it's 1.7%. Uh, so these are in terms of in per commodity, and what I have here is the inflation actually troughed. It was lowest in July and started to pick up, albeit it's still very slow, very low. Uh, there has been a deflation, not inflation, deflation in rice and inflation in meat and fish. And what I see here in terms of the transport, we would still have mild inflation in transport. Uh, for example, the global price of oil is on the downside year on year from $72 per barrel to $65 per barrel. The sources, the target is the biggest inflation that we have is well, there is an actual deflation in rice of 17%. So price went down by 17%. Vegetable price went up by 17%, fish by 8%, and meat by 5%. Okay. The target is 3%, the actual is 1.7%. So I have to explain basically is why we missed the target, why 1.7%, and why not 3%. So if we just include fish, meat, and vegetables, the 3% target inflation would have been 3.8%. But if we factor in the rice, that's negative 1.8, and the five others, which are passenger transport, fruit rentals, food and beverage services, information services, then put them together, then inflation is 1.7%. There are 55 goods in the consumer price index that is being considered. We have here one, uh, s- uh, 6, 7, 8, 9. So everything else balances out to 1.7 to 3%. So 1.7%, but if not for rice, inflation would have been 3.5%. So inflation is expected to be still down. So what I have here is the price of rice, and then the inflation in rice. You'd see here, so because I start with July 2022 because that is when the promise of 20 pesos per kilo started, but it went up actually to 2024, and now it's been down correcting. So it's down to 42 pesos per kilo, which is still above the beginning of 40.8, but still it is on the downtrend. And that's why inflation, the influence of rice in inflation would continue to be deflationary. The one that has the biggest, third biggest impact in inflation is the price. And what you see here is it is still on the downside because November, the price of the price of oil, sorry, has gone down from $72 per barrel to $65 per barrel. Looking ahead, inflation, the latest number is 1.7%. We anticipate November to have an inflation of 1.5%, so that in the whole 2025, inflation will average 1.6%, which is below the target range of 2 to 4%. So inflation in meat, fish, and vegetables, and then taking in the factor that rice is still deflating. I'll go now to the next one, unemployment, because causing job losses means causing grave social harm, quoting from Pope Francis. Jobless rate eases to 3.8%. What is the 3.8% unemployment in July in reference to population? Then we look at what do the official rate means in headcounts. So we approximate that the population of the Philippines is 113,782,000. Of those, uh, 33,799,000 are younger than 15 years old, so they cannot be part of the labor force. That leaves us with 79,983,000 that are 15 years old, at least 15 years old. However, not all are the participants. As indicated here, the labor force participation rate is 64.5%. That gives us with 28,426,000. For example, most college students are over 15 years old, and most of them do not work. They are in full time. They work as full time students. Then you have also the retirees. The participants of the labor market is 64.5%. That leaves us with 51,558,000. Of the labor force participants, as indicated, 3.8% is unemployed, and that's the green part here. That's 1,956,000. Roughly 2 million that are looking for a job and has not found a job. That leaves us with 96.2% employment rate, and that's 49,602,000. Of those employed, okay, so the unemployment is 3.8%. So I might as well, it's often that foreigners ask me, especially from OECD, how come unemployment in the Philippines is lower than most countries in OECD? For example, Europe unemployment rate is around 5.5%. Basically, there's been a finding, study shows that unemployment benefits motivate workers to be active in labor force and can help to keep workers in the labor force. Okay. What we have in this country is we have unconditional transfers. What they have in other countries is benefits. That means you have to show that you're unemployed, and by showing that you are unemployed, you have to have proof that you are looking for a job, or you are, and the government can even require you to train. So if you are looking for a job or you are training, then you will receive unemployment benefit. What we have strategically is unconditional transfer, which means you do not have to be unemployed. You do not have to prove that you are looking for a job, and therefore you do not have to participate in the labor market. And that's why the unemployment rate, 3.8%, seems lower than those of many OECD economies. So lower participation lowers unemployment rate. So our simulation is if this 64.5% labor force participation rate increases to 65.5%, then unemployment rate is going to be 5.3%. which is at par with OECD economies. Of those employed, of course, you have the underemployed. That's 11.1. So these people are either working for more than 8 hours, but do not make enough for a living, or have work but work less than 8 hours per day. Then you have the fully employed, which is 44,079,000. Of course, a minor, small part of the non-participants somewhere here is that's 2,160,000 that's not working in this country but working abroad. That's the OFW. In terms of rates, the unemployment rate has increased from by 0.1 from 3.7 to 3.8%. Underemployment decreased by 0.8 from 11.9 to 11.1%. In headcounts, 270,000 previously employed lost their jobs. 208,000 of them left the labor force, and 63,000 became officially unemployed. Among the underemployed, there is less 421,000, so a reduction in the underemployed by 7%. By sectoral and subsectoral, the numbers indicate here that at net, there are again 270,000 jobs, mostly services, were lost. That's 899,000 jobs in services that's lost. The biggest employers account for 48% of all employment, and that would be retail, agriculture, and construction. At net, they produce 601,000 jobs. The biggest winners are construction, fishing, accommodation, and food services, and they produce 1,134,000 jobs. The biggest losers are administrative and support services, manufacturing, transport, and storage, and they lost 890,000 jobs. I'll now go to finance, and later on, we'll go back to this expression: the time to repair the roof is when the sun is shining. In terms of international finance, everything is, I think we are in a good state. It depends on the theory. So the 59 pesos per dollar is more of psychological, but theoretically, the peso should move sideways. In fact, depending on the theory, the peso could actually be uh, appreciating relative to the USD, the euro, Japan, and even the British pound sterling. But why do I say I'm the 95% confidence is it within the year it will fall between 57.04 and 61.02. Um, but it will move sideways because of the fundamentals. What are these fundamentals? Where do we see sideways? So it's psychological that it's 59. You'd see here relative to the dollar, it went up as if creating an illusion that the peso is weakening when actually it's not. It's the dollar that's strengthening. Why do I say that? If we look at the mostly traded currency in Southeast Asia, the Sing dollars actually depreciated even more relative to the dollar. If we look at the biggest, mostly traded currency in Asia, the Japanese yen also depreciated relative to the dollar. And then you look at the second mostly traded currency in the world, the euro. Of course, the mostly traded currency in the world is the dollar. So the second one, euro, even the euro has depreciated. So the 59 here is mostly psychological because it breaks 59. But looking across, it's actually the dollar that has appreciated across currencies around the world. In terms of reserve, another fundamental to look at is uh, so this is the global the what I have on solid line is the import cover, which means our reserve is equivalent to 5.9 months of import. Uh, then it was lowest at six. Then during this is the financing of the build. So we started importing construction materials, and then it peaked at 110 billion, equivalent to more than 12, equivalent to more than 1 year of import. And right now, October 2025, the latest data, that's $100 billion in reserve. The import cover is 7.3 months. What is healthy and not healthy, the threshold is it has to be at least 6 months. And we're in good shape. Another indicator, international finance, is this is the what I have here. The blue is net primary income. That's dollar that comes in as an income versus dollar that comes out because of the trade deficit. And this is 14.2% as opposed to 10.5% of the GDP. Therefore, more dollars in terms of GDP will come in than go out. And that has been happening the past few quarters. So what we have here is it's usually what usually is this is funded by the OFW, but we will see that it's there we probably have new sort of heroes in the economy, uh, and we will discuss this in the next slide. So in the last 4 quarters, net primary income from abroad of 3.2 trillion or 14% of GDP more than offsets or finances the balance of 2.3, trade deficit of 2.3 trillion or 10.5% of GDP. This is the OFW remittance. In terms of value, it continues to increase. But in terms of rates, it's only increasing by 3%, 3.2% specifically. So OFW is still increasing, but the fact that 3.2% is less than the GDP growth, then we will need the OFW, but they will become less significant as time passes. So question now is, how does the net primary income from abroad continue to increase by more than 20% when OFW is increasing by only 3%? And there are several explanations. Could be a combination. For example, you have retirement. There is the special resident retirees visa. There is online work. There is the digital nomad visa where they can have a visa, work here. Foreigners can work here, and then work remotely. And that approximates to 200,000 foreigners in the country. And then apart from that, introducing the W-8ers. What's the W-8ers? Uh, these are remote intelligence using artificial intelligence, remote in the sense that they're working here for a company abroad using artificial intelligence. So these people are not threatened by artificial intelligence. These people are the ones using artificial intelligence. For example, content creation, whether it be in the arts, actual work, programming, animation, cottage service, for example, secretarial duties. And why do I call them W-8ers? Is because basically all of them has to file the federal form W-8 or Certificate of Foreign Status of Beneficial Owner for United States Tax Withholding and Reporting. That means they have to file this or with their small business American companies so that they can work here, earn money, and they don't have to go there. Now I go to, so that's international finance. Everything looks healthy. Now I go to public finance. This is now the budget deficits through the years. You would see here that it's basically a history of budget deficits, only surpluses in 4 years of President Ramos' time. However, just because it's mostly negative, it doesn't mean it's bad. The accepted healthy deficit is 3% of GDP. So there are times that it has been less than 3% of GDP, the deficit, but here it's now we are so that's above 3%. Of course, another benchmark how bad these or good these deficits are in comparison to The growth of the economy, the steady state growth of the economy indicated was 6.1%. So GDP is growing a bit faster than the debt for as long as the deficit is less than 6.1%. But still, what we see here is this is the pandemic, and that's understandable. That's the humanitarian thing to do is spend to help the victims and those who lost jobs. But the past 2 years with the new administration, the deficit has not gone down pre-pandemic of less than 3%. Why is that? Is another breakdown why with the deficit is that the blue line is the collection as a percentage of GDP, and what we see here is the government is doing its job. In fact, as a percentage of GDP, the collection is higher than what we have historically. So this is higher. What is the problem is, okay, the spending during the pandemic is this much. So it spiked during the pandemic, and that's the humanitarian thing to do. You have to spend to help those were suffering. But but after the pandemic, this is still the spending. So our government is spending as if we are still in a pandemic. So why do I quote JF Kennedy? The time to fix the roof is when the sun is shining. The financial sun is shining, and we are not fixing public finance. And the problem is when the financial rain starts coming, then this could be troublesome. This is the public finance, the total debt. Uh, so in the past, before the pandemic, as debt grew to 8.2 trillion, the debt to GDP ratio had declined from 87% to 42%. That means before the pandemic, we were not eliminating the debt through austerity, but we were outgrowing it. We were borrowing, but we were investing and growing. However, after the pandemic, right now, the debt is roughly uh, 16.6 trillion or 62% debt to GDP ratio. Just to give meaning to these numbers, to be in the watch list of the multilateral institution, if your debt to GDP ratio is above 60%, you will be on the watch list. Uh, so that means 62% is just above 60%. It's below the Reinhardt-Rugoff threshold of 90%. The Reinhardt-Rugoff threshold of 90% means basically economies whose debt to GDP ratio is above 90% uh, has been shown to grow slower. Then the global debt to GDP ratio is right now 95%. And what you see here is before the pandemic, uh, and then and then during the pandemic, the debt increase. That's the good thing. We had That's the humanitarian thing to do. We had to borrow to help those who lost jobs. But what happened the past 3 years? If 2022 is the end of the pandemic, the debt continues to be up there, which means basically we continue to spend as if there is still a pandemic. So in public finance, what we see here is first of all, this what I have here is imagine these are the things that are causing these public finance problems. So for example, we have the Pantawid Pasada program. So imagine that all of these, that's 10,500 per unit, 5,000 pesos per jeepney, for example. It's 4,500 per bus, 2,500 per bike, 1,000 pesos for motorcycle, for trike. And imagine how many of those we have in this country. We are subsidizing them, and yet we are telling them to modernize. So how can that's time inconsistent economics, because you are doing something that's probably good in the short run, but not good in the long run, because the long run goal is to modernize these public utility vehicles. Another one is the DA in this news, Department of Agriculture expanding 20 pesos per kilo rice program pilot to cover 14 million Filipinos. That's 14 million Filipinos, 20 peso per kilo. So imagine that that's another cost, and that is not sustainable. Probably sustainable the next in this administration, but it cannot be sustainable forever. And then we have here, we are considering this is the unsustainable price control. Another one is mistakes in nationalization. So the light rail is losing money, and the government does not allow it to raise the price, and they're considering selling it. If they're selling it and they're losing money, who is going to buy it? Does it mean the government will buy it and then absorb the loss? Again, that's not going to be sustainable. In finance, this is just one page, one slide, because I'll yield the expertise to our colleagues in First Metro. But basically, what this says is the Philippines is the worst performing equity. Uh, well, the Philippine Stock Exchange is the worst performing stock exchange in Southeast Asia. I'll leave it up. So there's corruption because corruption is paid by the poor, quoting from Pope Francis. This is what I have in the horizontal axis is corruption index by Transparency International. And then I put it, juxtapose it with the nominal per capita income. And I think it's the pattern of hopefully among our audience is obvious. If you do the statistics, the econometrics, a 1 point downgrade in corruption index is associated with 6% lower per capita income. And then what's happened the past 10 years? What's happened with our corruption index? So the Philippines, by the way, is right there. And in terms of corruption index, the past from 2013 to the present, the corruption index has gone down from roughly 35.5 to 33.5. So that's 2% downgrade in the corruption index. So with per capita income of $3,985 in 2024, a 2 point downgrade in corruption index, as indicated here, approximately cost the average person $480 in 2024, or if the exchange rate of 58 pesos per dollar, that's approximately each one of this room, that cost us 27,700 in 2024, each person. My last one in terms of corruption is let me quote Shakespeare's Hamlet. Something is rotten in the state of Denmark. All right. I'll spare you with reading this entire thing, but nonetheless, this is the ASEAN Center for Energy. This is in Vietnam, and what it says here in Vietnam, AC Energy Inc., a unit of conglomerate Ayala Corporation. We all know what that is. That's a Philippine company. Completed a 330 megawatt solar farm, one of the biggest in Southeast Asia. They did something that is one of the biggest in Southeast Asia, and it's not in the Philippines. The construction of the 294 million solar project, which started in January last year, took 14 months. If we did this construction, I'm not sure if we can make it in 14 months here in this country. They did it in 14 months. Ayala Corp and the partners, they employed 2,000 workers abroad throughout the construction phase. And who financed this? Rizal Commercial Banking Corporation, RCBC, was the sole lender providing non-recourse project financing of $232 million. Okay, that's one. Another one is this. This is about 3 days ago. Manila Water, I think we know what that company is, signals entry to Mexican market via Agua de Puebla. So they are doing their investment outside of this country in Mexico. We are not blaming these companies because the fiduciary responsibility of corporations is to protect the best interest of their investors. And those investors include us. But the fact that the corporations are doing their responsibility on foreign soil must mean that something is rotten on domestic soil. There's something out there on the ground that we academics, that we statisticians, that we economists are not seeing that make them decide to invest elsewhere rather than here. So as a wrap up, let me talk about growth as an annual growth. Annual growth will be 4.7%, second fastest in East Asia, although it is still a negative output gap. Inflation, the average annual inflation will be 1.6%, which is below 2 to 4% target range of the government. Unemployment will be comparable to OECD rates and at full employment. So we are good in terms of employment. We are okay in terms of inflation. International finance, we are in a good position. The Philippines will move sideways. It is a question of the dollar strengthening or weakening. Public finance before and after COVID. So there has been 3 years of unsustainable spending. X to go. We don't know when will this last, or maybe hopefully our government would reverse course in terms of its spending. And then finally, corruption in 2024 approximately costs over 27,000 pesos per average citizen in this country. So thank you. I'll stop my presentation now.
Thank
Thank
you
you.
so much, Dr. Dumlao, for that insightful presentation. Before we move on to the Q&A segment, we'd like to invite our audience. Feel free to type in your questions in the Q&A box, and we'll do our best to address as many of them as possible. We will also be uploading the webinar recording to our official YouTube channel, that's at First Metro Securities, so you can watch it at your own convenience. So I think we're already ready for the Q&A. Let me read the first question. Looking at the data, it appears that private consumption and not just government spending was the reason for the decline in GDP. Is this correct?
Yes, it's across the board. That means there's something, it's really slowing down. And that's why even our top official, Secretary Recto and Secretary Balisacan, had conceded that we will not grow, at least the fourth quarter will not grow by 5%, at least will not reach 5% growth. Sorry
Got
to say.
Yeah. Next question that we have here. What is your confidence level in the employment numbers? I continue to struggle because it seems there is minimal unemployment, but it doesn't seem like this is the case.
Again, the part of the explanation for that is the labor force participation. Let me just say one. So the latest data was October. Statistically, we don't blame government, but because this is ILO standards. If you work for only 1 hour in 1 month, you will be considered employed and you cannot be considered unemployed. That's one factor. So many of these are underemployed. As we see, underemployment is still about 10%. Okay. The second one is labor force participation rate is low. And why it is low? Because basically our government, the strategy is uh, unconditional transfer. Whether you are looking for a job or not, they will give you the transfer. And therefore, if it is unconditional, you don't have to look for a job. Okay. And you will not be classified as unemployed. However, in other economies, other countries, it is a conditional transfer. These are unemployment benefits. How do you receive the benefits? You have to prove that you are unemployed. How do you prove that you are unemployed? You have to you have to prove that you are applying for jobs, looking for jobs, and government can uh, even mandate you to go job training. So if you do that, if it's conditional transfer, unemployment transfer, you will register yourself as unemployed. You will be categorized as unemployed, and the unemployment rate will be higher, consistent with other countries, OECDs.
I guess as a follow-up to that, you mentioned that raising labor force participation rate to 65%.
Mhm.
makes unemployment 5.3%. Does this mean current employment figures are not as robust as they seem?
Uh, it's the it's around 3.7%, but if we just lower the increase the participation rate by 1%, it's going to be over 5%. Uh, that's still okay because by OECD standards, that's full employment. But what the problem is, the 5% is still good. Okay. The problem with the 3.7, it looks too good to be true.
I guess still related to that jobs data. Do you think job losses in services are from AI layoffs of large multinationals such as Amazon and Oracle?
No, not it. It's across the board. But mostly the ones I think it's retail. That's the other one that's causing the job loss. It's from retail also. Um, Let me just look at the numbers again. Uh, so the biggest jobs loss is administrative and support services, manufacturing, and transport and storage. The one that's been consistent is transport and storage. So companies had been slowing down on in their in their they're cutting down their inventories in terms of storage of products. Basically, that's what's happening.
Yeah, I guess we touched up on the topic of AI.
Mhm.
Just a question still on that. Given the pace of AI adoption today in the Philippines, how might that shape up unemployment figures in 2026?
Actually, it can actually help. It's it we have two choices. We can either be victims of AI or we can use AI, and that's what's happening with our digital content creators. That's what's happening with the our remote cottage services working here. They are actually using AI, and that's the ones that's creating. They are contributing to the dollar earnings. So there's good, there's bad, but in terms of the good is it's in there, it's international finance, it's in the dollars that's come in. That's the indication that I'm looking at.
Understood. Now, on a different topic,
Mm.
another question we have here, 40 years of deficit is bad, right? I struggle to think that there are some positive points in this area.
No, that's uh deficit is okay for as long as it is about three less than 3%. That's okay. We have to we again, I used to be dean of the John Gokongwei School of Management, and I would used to say that if Mr. John, if my patriot father, my patriot father, Mr. John had balanced his budget his entire life, there would not have been the conglomerate that is JG Summit. What he did was many years of deficit, but what he did was uh, he grew his liability, but his asset grew faster. And that's what we did we were doing before the pandemic. We were borrowing, and then we were borrowing to invest to create growth. And that growth that we had was faster than the growth of the debt. So we were outgrowing the debt. The problem is all of that reverse course after the pandemic. And right now, we keep on spending. It's not sustainable. What we're doing with the ayudas, the dynamically inconsistent subsidies, and eventual nationalization of many companies, that's not sustainable.
Got that. Maybe just a reminder to our audience, feel free to type in your questions. I think we have a few more time. We can extend for a few minutes, I believe. Another question that was sent here, why is interest rate still high even if inflation is low?
Uh, do it it's it goes both ways, right? That means like so the demand is still high, I suppose. Well, if anything else, that's the indication. Demand is still high, and then uh, and there's the risk that the banks have to face, and that is therefore they're willing to lend only up to a certain risk up to a given risk premium. Uh, so that's why basically that's why interest is what it is today.
All right. Another question here. Considering the current strengthening of the US dollar, how do you expect the USD PHP rate to evolve over the next year?
Uh, it will remain within, actually the theory says we should be appreciating with all the dollars that's coming in. So what it is right now these days is what we've seen is it's breached the psychological 59 pesos per dollar barrier, and rightfully so. It has a psychological effect. It scares people. Maybe it should. But if we look across the board, across currencies, all currencies are down except they are not in a threshold number, and therefore it does not have a psychological impact into it. But objectively, the peso should still be strong. Well, not strong, but the peso should be, we should move sideways.
Yeah, and I'm not seeing any more questions here. Just one last, I think. Doc, regarding sources of net primary income, does this mean
Mhm.
that online work, foreign workers, and remote intelligence roles are bigger than remittances in terms of contribution? That is why net primary income is growing 20%.
Yes, that's what it looks like. And there are we don't with our unknown unknowns. Recently, the Department of Finance has started looking at. Imagine us 1985, 1986. I don't know if people remember it. 1985, 1986, OFW was a new phenomenon. And then there's no data there yet, but we're seeing something that's weird, it's a new animal and it's growing and it's growing. And then it's only after several years that we were able to formalize its actual contribution in the economy. That's where we are right now. There is a new animal out there, and it seems that it's remote intelligence that we are not able to measure yet. So even the Department of Finance is on the race to find out what these numbers are, uh, and even and and unfortunately, they have a motivation is that motivation is how can they tax them?
Yeah, thank you for taking that on, Doc Dumlao. And yeah, I think that concludes our quarterly economic briefing. Again, a big thank you, Dr. Luis Dumlao, for your thorough and well-crafted presentation, as well as for the engaging exchange during our Q&A session. We also extend our gratitude to everyone who joined us today for this fruitful discussion on the third quarter 2025 GDP results and the country's economic performance. As a reminder, the views and opinions expressed in this webinar are those of ACERD and do not necessarily reflect those of First Metro Securities or the Metro Bank Group. Finally, to help us improve the quality of our webinars, we kindly request for 2 minutes of your time to fill out our feedback form for this session with ACERD. You may scan the QR code flashed on your screens. This special briefing with ACERD was proudly brought to you by First Metro Securities. I'm Ange Bakay, your host for today's session. Thank you once again for being with us. Enjoy your weekend, everybody.